Hey, my name is James Nicholson and welcome to my YouTube channel. Interest rates, mortgage rates are going up. This is not great news. We've had a price war for a few months now and mortgage rates have been going down significantly. In fact, I'd estimate about 1.5% off, which is a big difference to a lot of people. A year ago or so, we had the Liz Truss budget, which pushed interest rates above 6.5%. So in this video, I'm going to talk about why has the price war maybe ended for now? What should you do if you've got a mortgage that's coming due fairly soon? And what are banks telling investors might happen as well? This is not a positive video, I'm sorry to say. But while you're here, if you haven't done already, do subscribe to the channel over there and hit the bell notification. We've got new content every single day. We're at 31,000 subscribers now, which is insane. Thanks to everyone that subscribes. And while you're here, smash like, tickle like, do something to that like button. That helps with the YouTube algorithm. And one last third thing I'd like you to ask in this video is, could you share this video? I want more people to really understand, because I've made tons of videos, the press have done tons of content about interest rates dropping, but I want people to know potentially if they're going up so they can do something about it a little bit quicker. So maybe share this video, WhatsApp it to someone, email it to someone, Facebook message, whatever. Let's get the word out on this video. So what's going on? Well, I've made two videos this week on very different perspectives. We had firstly John Charcoal, who was saying that they believe that mortgage interest rates could drop to 3% by Christmas. That's one side of the coin. And the other side of the coin is saying that interest rates could go up to 6.5%. And that's based off the fact that Rachel Reeves has her budget in the autumn, and they're telling us over and over and over that tough decisions will need to be made. We've heard that. I'm sure you've heard that in the press. Tough decisions will need to be made. That's not good sign, is it? And so there's a lot of speculation about what potentially is going to happen. We're expecting that potentially inheritance tax could go up. We're expecting capital gains tax could go up. That's meaning a lot of people want to leave the market at the moment. They also want to borrow around 50 billion extra. And a lot of places that have done analysis on this are saying that that's what's going to potentially push interest rates up. Now, yesterday's video, we talked about the Rachel Reeves side of thing, which was potentially interest rates going up. And we had hundreds of comments on that video. A lot of people bashing Labour. Some people saying, look, this isn't going to happen. It's unlikely to happen. She isn't as out of control as Liz Truss was. However, the market is reacting, and there are already lenders today that are saying they're going to put their interest rates up, and more are expected to do that again as well tomorrow. So lenders are spooked by this budget, and if they have uncertainty, that's the biggest problem you can have in a market, is uncertainty. And we've got a hell of a long time. I think it's 20 days now until this budget actually happens. There'll be some leaks along the way to try and get the markets warned of what's going to happen. But right now, there's a great amount of uncertainty. And because of that, some lenders are already putting up their rates. So let's talk about who is not massively positive about this. So first is Coventry Building Society. So they have put rates up on all of their products pretty much straight away. And Coventry have been one of those lenders that have been doing quite aggressive price cuts. There's hundreds of mortgage lenders, and I've mentioned Coventry definitely at least a handful of times. They're always looking to be competitive and get new business, but now they're not. They've decided to look at their rates, and they're actually putting their rates up. Nationwide have said this isn't positive either. They're not putting their rates up for now, but potentially something might change. They do react quite quickly to the market sentiment nationwide. They have put rates up over the last few months, but they've also cut. They've also been one of the main lenders that's been cutting quite aggressively. Lloyds Bank, they put out a warning to all of their investors in their stocks and shares, and they're saying that potentially interest rates, mortgage rates, I'm not talking about the Bank of England rate necessarily, I'm talking about the mortgage rate that you get, that I get. That's more important. While the Bank of England rate is great, that's a guide to the market. When what we really care about is what's the actual rate of interest that we're going to pay. Lloyds are saying they believe mortgage rates are going to potentially go up, and it could be significant. And off the back of that, they expect defaults on mortgages to rise as well. That will impact house prices. That will impact repossessions, which is not great for those people that get in arrears and have a very difficult time. So it's not positive. This isn't something that we really want to happen, but I want people to know about this as quickly as we can. This is news breaking today. It's not featured in a lot of the mainstream press, which is why I want to make a video. So if you've got a remortgage coming up, you're aware of what's going to happen. I've said in videos recently, what I want you guys to do is, if you have a mortgage coming up in the next 2, 3, 4 months, start looking for a deal now, speak to a broker, lock in that deal. And then now let's just say you've got a deal that starts in January this year. Lock in that deal today. And then between now and January, that deal's kind of in the limbo land where you've agreed it, it's all done, but it hasn't started. Let's just say John Charcoal, they're the guys saying that interest rates, mortgage rates will drop to 3%. Let's just say that hopefully they're the ones that are correct, right? Maybe they are. And in that scenario, the lender that you're borrowing from cuts their mortgage rate. You can then go back to the lender and swap on to that better rate because you haven't started the new deal yet. That's important to understand. So what you've done by doing that is locking in your worst case scenario. That's very, very important, because let's just say you don't do this and then the budget is terrible. It's awful. The market reacts badly. They're really spooked by it temporarily and the interest rates shoot up. Then you maybe could have had a 3.64%, which I think is one of the best rates at the moment. And suddenly you're now looking at a 5% interest rate or a 6% interest rate. That's a big difference. And it isn't something that necessarily needs to happen. So who knows what's going to happen? We've got two varying opinions here. We've got John Charcoal saying, look, the market is going to get even better. We've had the Bank of England in the last week saying they're going to cut rates more aggressively as well. But we've also now got the market is definitely spooked by the Rachel Reeves budget. They want more information, and that's something that Labour potentially is going to have to do ahead of time. Start priming the market. Let us know a bit more about what they're expecting to do. If they're looking to spend lots of money and they don't have a clear plan and the markets don't believe in it, then the interest rates could shoot up on a short-term basis like they did with Liz Truss, and that's not good. If you think this isn't likely to happen, you've already got one lender that's done an increase in rates, and you've got more potentially happening tomorrow as well. That's what most brokers are expecting rates to go up tomorrow, being Friday. Let me know your thoughts, questions, opinions, or observations on this video by commenting below. Do like the video, and this is one that I'd really appreciate if you could hit that share button, WhatsApp it to someone, email it to someone, Facebook message it to someone. I'm sure you know someone that has a mortgage or is a buy-to-let investor or even their own residential property that you know is going to be looking for a new mortgage soon, and they could really benefit from this information. Do also check out all the other content on my channel, including this video right here.